welcome to India Market Close. And there's no Friday cheer for the Lal Street. Quite an interesting day. The Nifty tanked about 300 points through the day after it made a record high of 22,694 is when 794 post that. We saw a big fall on the street. 240 points from the days is what we've had from opening today. So 300 points from the day's highest point. The Nifty down about 1%. Bank Nifty doing badly, but not doing as bad as the index, down about 0.9%. So 420 points lower is what we have on Bank Nifty. Broader markets aren't doing too badly. The losses clearly are being led by the large cap names in the frontline counters. Broader markets are seeing some weakness, but like I said, the cut is not as sharp across the broader market universe. Mid and small cap index down about 0.6%. The Sensex also trades down with the 1% gain, in the Nifty trading pretty much at the day's low point as we see it. Across the stock movers, it was Reliance that led the way down in today's trade. It has reached its lowest level in over a month, probably one of its biggest falls seen in the recent past. RL seeing a cut of nearly 3%. Auto is doing quite badly, interestingly. So Tata Motors, that was looking very good on the charts up until yesterday, is down about 1.5%. Maruti is down nearly 3%. L&T is down 3%. Metals are seeing some profit taking. Adani Enterprise post numbers is down 1.5%. IT and pharma have been on the soft spot for quite some time now. The weakness there continues. On the buy side, Coal India is looking pretty solid. Numbers were pretty impressive from Coal India stable, on back of which the counter is up 3.5%. Select pharma names like Dr. Reddy's are doing okay. Bajaj Finance, on back of the news flow this morning, is trading with a gain of 2%. ONGC, on back of crude price movement, is looking okay. Hindalco, Cipla are a few gainers that we are seeing. But the breadth of the market is weak. The bias very clearly, like you can tell, is on the downside, with more counters losing in trade this afternoon and gaining. That is what the breadth looks like. You've got about 526 stocks that are gaining for about 1,413 stocks that are actually moving lower. Most counters are off the day's point. In fact, trading pretty much the day's low. The Nifty at its day's lowest point, threatening 22,400 as we see it, Hersh.
Absolutely, and let's pull up some stocks which are in focus today on the back of earnings. First off, a slew of counters which are buzzing on the back of numbers. Let me first start off with numbers which came in yesterday. Look at something like a Coforge down 9.5%. I know Samina covered that, but let's also pull up something like a CEAT down 3.1 odd percent, Realtel down 2.5+%. Margin contraction, profit contraction as well on that particular counter. KEI Industries is down 2% as well. Let's look at some positives in terms of a Blue Dart, 8% higher. Ajanta Pharma also very strong numbers, 8% higher on that one as well. Coal India is up and away, 3.5% higher. Again, part of the Nifty 50, but that one is up as well. CIE Auto up about 1% or so. Smaller company, but nonetheless 1% higher on a tough day of trade. Not bad at all. Let's pull up some other counters which are in focus. MRF down 4%, again on the back of a decent-ish set. Raymond has been down since the morning, 3.5% or so lower. Outside of that, property stocks, Shriram Properties, Godrej Properties, both of which are up roughly 0.5% to 1% or thereabouts. Among other counters in focus, you have a Bajaj Finance and a Birla Corp, both of which are in focus and both of which are higher. You also have a Max Estates, a second consecutive day of gains for that one. And you have something like a Ugro Capital among the smaller cap players. That one is up 1+% as well. And IEX is doing well in trade as well. Look at an Aptech, look at a KEI, some of the other stocks buzzing on the back of news, 7% and 1% down respectively. And let's also pull up some counters like a Yes Bank, where a block was seen and 1.5% down. You had Carlyle selling off from Yes Bank a portion of its stake. Let me also call on board Aditya Arora from Adiltech.in, and we have Dharmesh Kant, who's the head of equity research at Chola Securities. Welcome, Aditya, Dharmesh. Well, let me start off with you, Aditya. How are you looking at markets? We've seen a bit of a fall, at least to close the week. How are things looking?
Hi, very good afternoon to you and to everyone. I think markets are pretty dicey, volatile, and uncertain just ahead of the election. I think that is the nature of the market as we approach closer to a very big event like election, budget, or anything like that, Federal Reserve policy also. So this is a very big event in 5 years. I think markets will tend to behave very erratically without any trend. I think we are going nowhere. Not big upside, not big downside. We are going to linger in this broad range of 1,000 points on Nifty with very swift moves on either side. That is actually killing a lot of option traders these days. We hear that so much on the social media that there are random spikes on both sides, call and put side. So that nature is going to stay just before market gets lighter and we move swiftly in one direction as we get clear indication from election results. So that's overall texture of the market. I think I would play market by buying the dips and selling the highs because it's going to be a range bound market. If we talk about today's market texture or today's trend, I think we have reached the lower band of the day. So for today, I would maintain neutral to bullish bias. I would be a put seller with defined stop loss. Today we had hit a low of almost 22,348 on Nifty in spot levels. So I think 22,300 is the support for the market, and I would establish a stop loss of 22,280 in spot level in Nifty. So that's how I would play bullish on Nifty, and similarly I'm bullish on Bank Nifty and Sensex as well. If I talk about sector specific, then I think commodities and metals are going to shine very brightly in May series.
Oh, bullish still on the Nifty and Bank Nifty. That's the word coming in, at least on the charts. Dharmesh, what is up with Reliance Industries? Do you know what's going on? The stock has gone down to its lowest level in over a month, one of its biggest intraday declines. What's happening on RIL, and if one way or the other, does it look like a good time to pick up this counter in today's weakness?
Yeah, good afternoon. I think today's correction in Reliance is not specific to Reliance. It's more to do with the large cap Nifty baskets selling which is happening in the market, which to my mind was a big surprise coming in the way. Because a couple of days back when the market was moving up, we all were confident just on the back of the liquidity flows which has been there. So, I mean, not much of a credence would be given to a stock-specific activity which is happening today. It's more to do with selling pressure. It would be interesting to see end of the day data about what are the flows from the DIIs and FIIs as well as the HNIs. Which segment of the category came for the selling in the market. So as of now, as we said, I don't see any particular news, though there have been some sideline news flows going around about some change in taxation policy post the government, but that's more of a rumor kind of a thing, nothing material as to that.
Right. Aditya, what about you? What's going on in RIL on the charts? Is there a breakdown, or it looks like this could make an opportunity for traders to go and pick up the stock for next week?
Right. So Reliance is a big heavyweight in index Nifty, and that is one of the contributor in creating huge volatility in option prices also. If we talk about chart patterns of Reliance, then I think, as I said earlier, markets are going to be range bound and a lot of heavyweights are going to follow that pattern. So I think the support for the Reliance is 28,020. Until that is protected on daily closing basis, I think that's an opportunity to accumulate the counter for higher levels of 2925 to 2975.
Clearly seeing that as an opportunity, Samina. But let's also try and pull up the other heavyweight which is pulling the index down. HDFC Bank is down 1% or thereabouts. Your sense, Aditya, with regard to what one should do at this point?
I think HDFC Bank has been an underperformer, and I think it will be an underperformer for a long time to come. The way retail investors are lapping up the share and institutions are reducing their stake in the counter. So it's going to be, we have seen this kind of pattern in the past also, wherein, people get over optimistic, as the prices fall. So that doesn't play out very beautifully, although there could be some trading spikes in the stock. But I think somewhere down the line, if we take a little medium term view, then I think HDFC Bank will again test its lows of around 1375 to 1325. I think medium term, I'm pretty bearish on this stock.
Okay, Aditya, and your picks while we just about started this show, your picks for this afternoon?
Sure. As the environment is pretty volatile and the market patterns are pretty erratic, I would like to go for defensive names, which are pretty stable in this kind of market. So my pick is Dr. Reddy from pharma space. So that looks good at levels of at current market price, and one must maintain. Just a second. Dr. Reddy looks good at 6365. It looks good at current market price, and stop loss must be 6240, and target would be 6600 to 6700.
Right. Dharmesh, what about Coal India? Did you look at those numbers? Brokerages seem quite enthused, and it's one of the few lone gainers in a down market today.
Yes, I mean the numbers of Coal India were quite promising. It's not only about the numbers, because the type of capacity addition which is likely to happen in the thermal segment as well for the power space has been quite interesting. Around 70 gigawatt kind of a planning is there for next 4-5 years. And that was missing. A year back, it was only renewable talk was happening, but I think the power ministry came out with a proposal where both needs to be added to meet the power demand. So that is helping Coal India well, and the execution has gone up. Now 6-7% kind of a volume growth they have been able to deliver, which earlier they were lacking. So both put together, the volume growth as well as the higher demand for power generation sector for the coal, that is helping them well. And at the same time, I think going forward with infra hitting up, there would be a demand of coal from even cement companies for their plants to be fired up. Valuation wise is still very cheap. I mean, whichever metrics you look at it, the kind of ROEs, cash flow it generates, and dividend yield put into place, I still think there's a good scope for it to go if you are a long-term investor. So a decent buy, portfolio buy at current levels, and maybe if one is willing to hold it for say a couple of years, 30-40% kind of upside, which is inclusive of dividend yield, is always there on the cards for Coal India.
Right, that's the word coming in on Coal India. Just very quickly before we go on to Coforge, which is the other important earning, Aditya, do you have a view on Coal India? Is it a stock you look to buy?
Yeah, I think patterns of Coal India are pretty bullish, and stock looks really good. I think this positive sentiment could spill over to the next day, Monday and Tuesday as well. We have seen rally in a lot of PSC counters in last 2 to 3 days. I think it's now turn of Coal India to shine bright. So Coal India is a buy at 470 level, and stop loss would be 450, and target would be 490 to 510.
Okay, understood. Let's switch over, focus on, or rather continue to focus on earnings. Coforge, another one that's buzzing. It's down 10% after posting Q4 results yesterday. Rucha joins us with what's pulling the stock down. Rucha, talk to us. 10% lower.
Thanks, Hersh. So there are 3 key takeaways in terms of negative points for Coforge highlighted. Number 1, Coforge missed the margin guidance by 70 basis points, and the revenue came around the lower end of the guidance. Next is the company suspended the FY25 revenue guidance due to uncertain macro environment. Now, this is what we also saw amongst other IT peers as well. And lastly, executable order book. The next 12 months executable order book implies a slower YOY growth for FY25 at around 17%, which was 20% for the last fiscal year. Now, 3 positives as well for the stock. The company had highest ever order intake of around $2 billion for FY24. Now, this means that the outlook is positive, but the suspension of guidance implies that the company is not sure of the near-term demand. Next is the company still expects expects to improve the margin by 150 to 200 basis points, and it also reiterated its target of reaching 2 billion revenue mark, all this by FY27. And lastly, the new acquisition made by the company, 54% stake in the Signity Technologies, will help the company increase its footprints around South, Midwest and Western parts of USA, and also enter into new verticals such as healthcare, retail and high-tech.
Just a couple of things that brokerages like Citi have had to say. They said that they're concerned that while the orders are coming in, they've closed in at lower margins, and that could be a little bit of a problem. So while the focus is on top line and the glide path for what Coforge is focusing on, it may be coming in at a compromise of margins. Apart from that, Jefferies also believes that this acquisition, they would have preferred rather that the company, that's Coforge, could have made an acquisition in a new technology business, and that could be something that could be more accretive to the company going ahead. So those are a couple of other takeaways. The Kant has also said that looking at no more acquisitions going ahead, hence there'll be no equity dilution. There'll be a tailwind of about 70 to 80 bips on the ESOP cost in FY26. So that's what Coforge is. The street is not pleased. Citi and Jefferies both coming out with a sell call on the counter. Very quickly, Dharmesh, what did you make of it? It's not a great quarter. The guidance has been suspended. They've even picked up and closed reads on lower margins, which is what Citi seems a little concerned about. And even the acquisition for 250 odd million seems like would have been better if it was invested in new technology.
I think, as far as investment in a new technology is concerned, that's an opinion. And the management of business, the management of Coforge, they are more capable of taking a business call, so which they have done. Why I think they have suspended the guidance is they want to see how the Security synergy rolls out, and that may take some time before the actual, benefits of this acquisition takes place, and that's the reason why they want to see a couple of quarters, and that is my thought process, and then they may come out with this. However, having said that, the problem with IT space is they are in a spot. If you look at last caps, they were flattish in growth. We did an aggregate of around 22 IT companies which have been reported in the numbers. The growth was 9%. Because of some mid and small cap doing a better kind of earning like Buildersoft, KPIT and all. But at the same time, the valuation at which these companies are trading were far higher, and the expectation was much higher of better margin guidance and better order intake inflows, which has not happened this quarter around. And that's the reason why we are seeing some serious selling pressure. Coforge, you have to give it a time. I think the valuations are pretty high, and this synergy in this turbulent environment has to be seen how it plays out, and that is what market has not liked.
So Citi, Jefferies, JM Financial, to name a few, have cut their target price. Axis Securities, on the other hand, believes that Coforge is well placed for growth given its multiple long-term contracts. But apart from that, most of them do believe there's an EPS cut of 24% for FY25 and 25% for FY26. Aditya, on the charts, tech has not been in great shape recently, at least. Now, the only hope is that if the markets to go into a little bit of a consolidation, correction mode, defensives do well. I know you're more optimistic about the markets rather than being negative. Do you feel like Coforge, a 10% cut today could be bought into for a technical pullback on Monday morning?
I think Coforge is offering an opportunity to accumulate the stock. I wouldn't say that to buy everything today, but I would, my view would be to divide the buying in two tranches. That would be today and Monday. So that would be a good way of accumulating this at levels of 4488, and second buy zone for the stock is 4340. I think around these levels, Coforge is a good buy, and there could be a pullback towards level of 4,800 and 5,000. So overall, if I talk about the long term and medium term view, then the patterns are definitely bad. We are talking about a short term bounce in the next week or in this May series, and the buying levels I have mentioned previously.
Sure. Okay. Thank you. We'll, really slip into a very short break here on India Market Close. More on the other side. Stick around. We'll dive deeper into everything that's happened in markets today. Welcome back. You're watching India Market Close here on NDTV Profit. We have with us Aditya Arora, who's still with us. Aditya, just in terms of sectors at this point, we're seeing a flip-flop versus what we saw yesterday, even in the sectoral indices. What's the sense with regard to the sectors that you're keeping your eye out on, especially on charts?
So, two sectors clearly stand out for me. One is banking. I think whatever the market outcome or election outcome, I think we are going to see great volatility, or it could offer great opportunities. Like we saw Fed meeting outcome yesterday, and because of that, we saw some volatility. Again, today data will come from USA, so that will again create movement in markets. I think banking sector is a good buy at lower levels for the May series. In anticipation of election, I think we could see some good buying at the lower levels. And second one, my highest conviction bet would be on Nifty Metal Index. The way international commodities have performed in last few weeks and months, I think that has created good headroom for a lot of metal companies and index itself. Nifty Metal Index is currently trading at 9240. I think one could maintain stop loss of 9,000. We could see upside till 10,000 and 11,000. So I would be a buyer in a lot of metal counters. That really stands out for me, and I think there's good 5 to 20% upside over there.
Two earnings that have just been reported. One is HFCL and JSW Infra. With regard to HFCL, the net profit is up about 53.2%. Revenues are down 7.5% at 1326 crores. And you've also seen versus 1433 crores, which is down 7.5%. To be precise, EBITDA is up 26% to come in at 195 crores versus 154. The stock is looking okay. It's actually reacted well to those numbers. JSW as well, if I can get those ones up on the screen, that should be helpful. From the face of it, those numbers didn't look too bad either. JSW Infra is also reacting. You can see that sharp spike coming in on the count in the last couple of minutes. Profits have come in at 329 crores. Revenues at 1,096 versus 915 crores. So it's up 20%. But I think the margins are a standout. We'll pull that up in a minute. EBITDA is at 581 crores versus 472 crores. So 23% high, and margins are at 53% versus 51.5. So a good set of earnings from both of them, HFCL and JSW Infra. Both those counters spiking up in the last few minutes. We have with us Prashant Tapsi, Senior VP Research Analyst at Meta Equities, now joining in. Hi Prashant, thank you for joining us. Prashant, first up, let's start with what do you think led to this sell-off? We made a life high early this morning. Global cues were looking okay. There were no concerns as such, except for the fact that the VIX had spiked up. But did you hear anything on the street? What led to the markets correcting so sharply?
I think there are two factors one should look at right now. The Q4 earnings are the major factors which are driving the markets. And there are few FII data which are coming out wherein large cap stocks, there are decrease in the FII data. So which is putting some pressure on the markets right now. Second, again, I think there are some geopolitical tensions arising which is giving spike to the Indian VIX. So which is giving an opportunity for traders to book profits right now. So these are two reasons which I am looking at the selling pressure.
Just a quick follow-up. So I do take your point that it could be a little bit of the earnings pressure. But if you look at the broader markets, which is where the bigger earnings or the earnings have come in first, so you have the RECs, the PFCs, JSW Infra, you've had the likes of lots and lots of the broader market stocks which aren't doing too badly this morning. The losses are being led by the large cap names, and RIL case in point, ICICI Bank. What is worrying these stocks?
I think what I said is the FII data which is getting reduced. The holding of FIIs
they
are getting reduced
selling the large
in the Q4 numbers. So that is putting pressure on the traders to book profits right now. That is the main reason.
So you would not look at this as an opportunity to buy?
I think with a rally of 1,000 points in last 10 days, 300 points should be a given point to the markets to book profits.
Understood. And how long do you see this pressure last for?
If I look at levels again, there is another 300-400 points downside can be seen in the markets. 22,250 would be a level one should watch for markets. If we close below that, and we can go towards 21,800 also.
Understood. And you continue to believe that pressure will be on the same names, same set of names, FI heavy names? Is that how one can look at that?
Yes, perfectly yes.
Okay, understood. And therefore, do you believe that this is an opportunity to buy?
Buy on technicals, not on the fundamentals, because yes, the numbers are good, the results are good, but the levels are not right now so good to buy at these levels.
Understood. So something like a Reliance down 2.5% today, that doesn't somewhere give you comfort in terms of...
No, right now, no, because post-result there are a lot of selling pressure in the RIL, and I'm not comfortable with RIL right now.
Understood. Any names at all that you're looking to pick up at this point?
I think again Tata Motors would be the preferred bet for me because of the auto ancillary numbers which are coming out. The index is up, the numbers are up, and it's a great play to play EV, CV and PV in one basket.
And Tata Motors hasn't participated in the rally, and more importantly, it was looking set for a breakout yesterday. Suddenly it's broken down on the contrary.
So I think we can see good rally coming few days.
What about Zomato, Prashant? You track that one? I mean, this one's holding up interestingly.
I think yes, you are right in that. Zomato is a very interesting story right now. We have a target of almost 20-25% level from these levels. I think one should buy at these levels, and the story is really great. They are getting EBITDA positive right now, and that is what market was looking for. Market was expecting it will never be on a EBITDA positive level, and these recent numbers are good to see, and we can have a projection for giving at least EBITDA positive and then come back to the PAT positive.
Very interesting. Let's switch over to Aditya. Take a quick take with regard to technicals on Zomato. Aditya, Zomato very close to its highs. At this point, in terms of charts, technicals, how are you viewing it?
So I have suggested buy on Zomato many times in the past, and we have seen one-way rally in Zomato from levels of 49 to 196. I think around this psychological mark of 200, the stock could take some time to consolidate and digest its fantastic rise. And I think it's a good buy at support levels of almost 170 to 180. That would offer a better risk to reward ratio. And from there, I think stock can again take out new highs towards 210 to 220. So overall bias on the stock remains positive, and it would be a better buy at levels of 170 to 180.
Okay, and Aditya, among all the names that were also spoken of, Tata Motors is the other one. Your view on that one with regard to charts?
When we talk about Tata Motors, I think there's a lot of consensus over there, and we have seen fantastic rally over there. My system suggests overbought zone, overbought levels in this counter at levels of 1,000 to 100, 1,100 to 1,100. So as per my technical system, it's a sell on rise at these levels, and we see stock dipping towards level of 900 to 800 in 1 to 2 months or so.
Right. That's the word on Tata Motors and Zomato on the charts. A couple of those broader market stocks that were eye-catching to say the least was the REC PFC twins. Good earnings from REC stable, and the stock has been rewarded by traders and investors alike. And it seems like every quarter REC reports and makes a new record high. Exactly what happened in the previous quarter and exactly what happened in this quarter as well. Prashant, did you track this one? I mean, the move was fantastic.
Fantastic, yeah.
But again, I don't think it came out of nowhere, because even in December quarter, we saw exactly that. Good earnings, the stock went up, hit a 52-week high, and then spent the last 3 months consolidating, and of course, woken up again with a pretty big rally now.
Again, I think I will focus more on the PSU as a sector, where RSC was not performing so well in last 2-3 years. But now the earnings are showing really great. Operating profits are really improving a lot, and the margins also are improving a lot. So I think that is the main reason why one should look at RSC PFC at these levels, and again look for good profits for Q1 earnings also.
Understood. Bullish on both REC as well as PFC. Aditya, your quick take on both of these?
Term trend has been pretty positive for these counters, but these counters have reached a euphoria level, and all the PSC counters seem little overextended on the chart, and Nifty PSC basket also seems pretty overextended. If I talk about the index, then it's trading at 1,246. So as per my system, it's a sell in level of 10,200 to 10,900. We see it correcting back to levels of 9,000 and 8,500. If I talk about REC and PFC, then over here again we are pretty bearish on the counters. For us, the selling opportunity is from levels of 550 to 600, and we see it correcting back towards a level of 500 to 450. And same is true for PFC. We are bearish in this counter. So it's a good sell between levels of 480 to 510. And we see it correcting back towards level of 440 to 400.
Some of these numbers that were reported today, the street seems pleased. So you had Blue Dart, which reported numbers. The stock is done really well, and especially in a day like today, doing a 10% up move is definitely noteworthy. You also had Ajanta Pharma, which reported numbers, 7% higher as we see it. You've got Piramal Pharma that's up 6%. Sterling and Wilson is up 5%. Supreme Industries is back on the winning streak, 5% higher as we see it. Coal India, good numbers. And the counter gets a thumbs up. HAL, BDL, some of those defense names that I want to talk to you, Prashant, about. Till a few weeks ago, that was the big theme to play elections: fertilizers, sugar, and defense. Defense, of course, it's part of a multi-year growth story. Recently, the last few days, stocks like your Mazgaon Shipyard, Mazgaon Docks, Cochin Shipyard, Garden Reach, add HAL, BDL to that list, have been soft. Do you think now may be a good time? And I'm not looking at it from a very long-term outlook, but in the next couple of maybe 6 to 8 weeks, would you buy any of these defense names?
I think yes, because when you see the geopolitical tension making a lot of headlines in the markets, so these defense stocks will obviously be in action. And government is planning a lot of things to do, and there are a lot of orders coming from the export market though. So that will keep this stock in action, and I think the earnings are also matching the price earnings which is going forward. So whatever the earnings, Q4 earnings are coming, which are matching with the demand and supply, and the order books are also giving us a very comfortable level for a short-term as well as a long-term trend. So we are positive on defense as well.
Anything specifically in defense that you're buying?
And I think Mazgaon Docks would be a preferred one for me. I think it has already rallied, but I am positive on that.
Okay, so it's Mazgaon Docks that looks good even now, despite the recent run-up that those counters have seen. We're going in the last 30 minutes of trade this week, and it's been an interesting week. We had record highs being made and big falls. We'll do all that and more over the last few minutes. We'll take a break, we'll come back, but stay with us. We'll top buy and buy today, sell tomorrow picks as well from our guest.
Welcome back. You're tuned in to India Market Close here on NDTV Profit. One theme which has done fairly well over the last year or so has been power. In fact, over a year now has been power. And with the kind of weather conditions that we're going to be seeing or already are seeing for that matter, power stocks will continue to remain in focus is the sense. Let me first go to Prashant. Sir, tell me, what's your sense with regard to power at the moment? How are you playing this entire theme? Because there are so many moving parts. Whether you call it the transformer side of things or whether you call it the transmission side of things. There's so many moving parts. How best do you play it and where are you seeing value?
I think if you see energy as a sector, there are a lot of things to discuss again. So all the other sectors like thermal and Nirmal and everything, so that will keep on adding a lot of demand going forward. If you see the heat wave, if you see the global heat index again, it is giving us a lot of opportunity for companies like producers of power to gain a lot of traction, lot of demand. So stock like Tata Power, stock like Adani Power will gain a lot of action at this point of time, and we are very much bullish on Tata Power right now.
Understood. And I know maybe not exactly power, BHEL, new order wins also coming in, but what's the sense? Something that's run up maybe 15 times from the COVID lows now. Is there still value left in some of those names? I know PSU and order books are large, but also execution becomes important where there are some companies which suffer from execution issues.
So I think here Made in India would be Make in India and Made in India story will come here to have a lot of order book and visibility of the company. Margins are growing, which is giving me a comfort levels which are on the operating side. Yes, valuations are very much high. If you compare last average of 5 years or 10 years in terms of BHEL and all, the valuations are at the peak, but the order book which is giving us a lot of comfort levels to have a hold position right now at these level also. Today it has already, technically it has crossed 300, 312 levels in BHEL. So I think still a lot of momentum is expected going forward.
Understood. And on charts, Aditya, if I can come to you, any specific names within that power basket that you are liking? BHEL is something that Prashant seems to like.
I like Adani Power in power space. The group company is usually gives high beta moves, and I think just before the election, in anticipation of results also, and being in power sector, I like this candidate. So it's a bullish candidate. It could be bought at 607.50. Stop loss would be 570 and target would be 650 to 660.
Right, that's a few of those Adani stocks as well. Adani Power on the charts is what Aditya is talking about. Talking about earnings, let's pull up Raymond and see what the stock is getting up to. They reported numbers earlier today. The stock is doing okay in trade. It's not doing too well, of course, because those numbers were disappointing, but the cut as well is not too large, and I think that's what could be a little bit of a relief. Mahima is standing by with the key details of those numbers. Mahima, what is it like? The stock is down about 2.5%, but it's not getting beaten out of shape, which is a little bit of a relief, I'd imagine. What do they do? What's the outlook looking like? The guidance for FY25 looks promising or not so promising?
Right, Samina. So I'll start with the numbers. Well, in terms of the revenue has been up 21%. EBITDA is up around 29%. Margins have improved around 104 BPS, and net profit is up around 17%. So overall, on consolidated basis, the numbers look good. But before I move on to what the management has said, we've got that the engineering business is to be consolidated in one, and that aerospace and defense business will be separated for Raymond. Now, in terms of the result, the real estate segment has done well. It has picked up momentum in terms of booking post the launch of Bandra real estate project that they had, and at present real estate business contributes around 25% to the total revenues of Raymond. In terms of the textile business, the performance remained muted. Around 2% growth is what they've witnessed during the quarter. And in terms of the acquisition of many precisions that is foraying into aerospace and defense. They've completed this by the end of this quarter. And post consolidation, Raymond is planning to set up 2 units, one which will focus on aerospace and defense, while the other will cater to the auto components and EV engineering consumer sector overall. So this is the guidance that the management has given for the 2 separate businesses.
Understood, Mahima. Prashant, if I can come to you with regard to Raymond itself, something that people used to call a value play at 1200, 1400. What's the sense now, and what's the scope like in terms of the demerger and value unlocking that's supposed to happen?
I think the valuation wise, it is fully valued right now. Matlab, whatever it was called 2 years, 3 years back for all unlocking, I think it is totally valued right now. At these levels, I am not so bullish to buy at these levels again. But again, with respect to the demerger, yes, we need to look at how valuations they are doing for the demerger and how that will be giving rewarding to the shareholders.
Right, that's the word coming in on Raymond. The stock is one that reported numbers at the day's low point now, 3% lower on the stock. Let's put up the Nifty and see what it's getting up to. It's recovered a little bit from what I can see. We've recovered from the day's low point, 22,477. So actually, that's not too bad. You know, we did get very, very dangerously close to break. In fact, we did break 22,400 intraday, but have recovered well from those levels. And I think that could be a reflection of the kind of tussle the bulls and the bears are having. The VIX is up, I think, about 45% in the last 7 trading days. 32% was up until this morning. We've added another 9% on the VIX. So there is uncertainty that we are seeing. Flows continue to look fairly mixed on the FI desk. Some PSUs are doing okay, but the rest of the street is in a little bit of a profit-taking mode. But if I had to pick up on banks, Prashant, how would you view banks? And I want to talk about Kotak in particular. You've had 2 bad newses on the counter in the last few days. They report numbers tomorrow as well. Kotak, would you be constructive on it? Do you feel like this is truly an opportunity to pick up a good quality bank?
Yes, I think we should have a positive view at these levels again. See, if you see the RBI issues, whatever happened to this, it's a common issue every bank is facing from last 2 years. Even HDFC faced the same concern few months back. Even Paytm had such kind of issues, but Paytm was a different story. There was a lot of larger issues. But I think in terms of valuation, I think if you see 5 years back, it was reporting a EPS of around 40 rupees 5 years back, and now it is reporting around 80 rupees EPS, I think. So with the same price again. So I think valuation wise, I think I am going to buy this stock at these levels. But yes, on a technical levels again, 1550 and 1500 would be a level one should watch and then buy.
Understood. Prashant, between an HDFC and a Kotak, both trading, maybe HDFC not as low currently as Kotak's recent lows in terms of relative valuations, where Kotak earlier used to trade versus where HDFC currently trades at. So we've seen lower levels at HDFC, but between the two, is there one of the two that you prefer, or do you believe that both have an equal opportunity?
I have two different opinion on that. For an investor, I think HDFC Bank would be a very comfortable level to buy and hold for long term. For a trader, I think it's a good opportunity to add on these levels and then make a good profit out of that. So, but two banks are very different. One is big in terms of their retail book and housing finance and all. But Kotak is again an institutionalized, commercialized bank for that. So for me, comfort level would be more on the HDFC Bank. For a trader, it will take more on the Kotak Bank.
A trader should pick up Kotak, but if you're a long-term fundamental investor, the 30% bank, like it used to be called in the day, is still looking good. RIL is also seeing some weakness, but let's pull up those candles and see if there's been any recovery in the last couple of minutes as we go into the last 15 minutes of trade. And the street is looking okay. The Nifty is attempting reclaiming 22,500, now 22,499, 91, 95 now on the Nifty. And I think this is what I am going to take heart from. Aditya, this is what we are going into. There is a little bit of a struggle, but there seems a good chance or a possibility that we may close around 22,500. This is sheer ambition of the bulls, right? And their persistence and perseverance, if I may say. Do you think buying the Nifty is a good idea, or it's not advisable to carry any positions into the weekend?
So as we were discussing a while back at start of the show, at that time Nifty was down about 230 points in the spot. Now it's down about 150 points. So a handsome recovery from there. Those who had taken, I had suggested neutral to bullish view for the day and also put writing strategy. So those who had taken the intraday position, they can take the profits home. They can take chips off the table. But those who are willing to take BTST trade and those who want to take carry forward trade, then I think it's a good opportunity to buy Nifty right now. If I talk about the future level, then currently it's trading at 22,790. So it's a good buy at this level. One should maintain stop loss of 22,450 on daily closing basis, and my target would be 22,600, 22,700 to 22,850.
Right, Aditya was sounding optimistic even the start of the show where he said that this could be used as an opportunity to consider going long. But Prashant, we've talked about a few stocks that we've identified, but if I had to ask you for 2 to 3 stocks that you're eyeing at this stage and probably recommending doing a staggered buy, today being one of those days, what would those stocks be?
I think I'll go with Tata Motors again because I'm very much comfortable with the business model and the growth which they're looking for EV, CV and PV. So that would be one stock which I will be aggressively going forward. At least for next 12 months, I can see a good earning growth plus good return on investments right now. And second stock would be Bank of Baroda on the PSU side. The way how SBI has rallied, I think Bank of Baroda and PNB would be the second best stock in the PSU bank, which can go good long for next few months. So I think these are the 3-4 stocks I will be buying it.
So Bank of Baroda and Tata Motors. Pull up Tata Motors. Like I said, it was very ripe for a breakout yesterday, but today, of course, it turned out to be a very different story. It's a decline all the way from 1,038, I think, to about 1,015 now on the charts. Aditya, any buy today, sell tomorrow, or buy today, sell Monday trades?
I would like to go with Shree Cement. Infra space is buzzing. We have seen a lot of PSCs do well. Now I think it's time for private infra company or cement companies to do well. So Shree Cement is a good buy at 22,750. Stop loss would be 24,800 and target would be 27,000.
Interesting. Okay, so those are Aditya's top picks. Prashant, if I can come back to you on the auto space outside of Tata Motors, as well as on the auto sales numbers for April and what trends seem to be like for FY25 as a whole. What's the sense that you can give us?
So I think even other than Tata Motors, Mahindra & Mahindra would be a great opportunity to look at this because the new launch, which is 3XO, will be the new trigger for Mahindra & Mahindra. Plus, Mahindra & Mahindra is doing great in terms of EV sales, which is not been still reported because they're not so aggressive. But yes, the performance when we compare with Tata Motors and EV of Mahindra EV is going a good performance report for the market. So I think second option would be Mahindra & Mahindra to look at.
Understood. Very interesting. What's your sense with regard to Mahindra & Mahindra? Aditya, stock has been on a tear and is doing fairly well in trade today as well, despite pressure on the benchmark.
Since that news of new car launch has come, Mahindra has, again, regain its lost glory. And I think Mahindra & Mahindra was one of the stock who started the fresh rally post Russia-Ukraine war. And since then, the outperformance of Mahindra & Mahindra has stayed intact. I think even at current level, I think it's one of the finest stock in auto pack. This outperformance could continue in May series as well. Although I'm not aggressively bullish, but I would maintain neutral to bullish stance in Mahindra & Mahindra.
Okay, somewhat of a bullish stance there on M&M from Aditya as well. Let me also switch focus or rather keep it on auto, but switch it to tires, another segment that's faced a lot of friction were some of the tire stocks. And on the back of a government notification, Puneet joins in to give us context perspective on tire stocks. Puneet, what can you tell us? What's the pressure or where is the pressure coming from? What's the impact like?
Yeah, thanks for that. So let me start with the earnings first and then go into the commonality of what the problem is, because all tire stocks are down between 3 to 5%. So for MRF specifically, the revenues have gone up roughly 9% to 6,300 crores, while EBIT, which is much below, which kind of was above estimates of 6,100. But on the EBITDA and the profitability front is where the company has lagged. The EBITDA was up 7%, coming in at roughly 912 crores, but much below analyst expectation of roughly 1,050 crores, while the margins are down 24% for the company, coming in at 14.36%, which is much below Bloomberg estimates of roughly 17%. As well as the profitability is down. Down from the analyst expectations, coming in at 396 crores versus 500 crores that the analysts had expected. Now, all these, now we do know that CEAT also reported numbers yesterday, and we'll get into it, but the key problem here for all tire stocks is the EPR related provisions that all of these companies have done. Now, do know that this provision is a government notification which asks them to provide for on the earnings that the companies has done over the past few years. So basically, the company has recognized a provision of roughly 46 crores is specific to MRF and for the financial year 22 and 23, which has led to that particular amount coming down, while the provision taken for the financial year of 2023 and 24 is roughly 98 crores. Now, do note, under this provision, roughly 35% of whatever amount that is sold has to be provided for and purchased certificates for through recyclers. And this is a government notification which came earlier in February of 2022, and now they've given how to kind of calculate the amount for each and every company. When we look at CEAT specifically, we spoke to the management today. They had said that the exceptional item of roughly 58 crores has been provided, while they say that the government notification is applicable to tire manufacturers under this particular scheme. For FY24, the amount was roughly 70 crores, while they've also told us that for FY25, this will be 1% of their total revenue, and the amount will be close to 100 crores. Do note, just to give some more color, under this particular scheme, it's not just the tire manufacturers that come in. The government notification is on products that are polluting in the environment. So tire stocks certainly affected by this. Apollo still hasn't come up with earnings, but we'll see if this provision is included in those numbers as well. Back to you.
Okay, Prashant, your views on any of these tire stocks? Up and away, of course, elevated in terms of valuations, but what's your sense?
I think Apollo tires would be a very comfortable level where we are looking to buy for long term. But with respect to whatever the government regulations are there, we need to wait and watch and how that will affect the profitability. But overall, with respect to auto ancillaries and tire stocks, we are going to have a good volume growth going forward, the way how the Tata Motors, M&M are there performing well. So overall, we are bullish on that.
Understood. And what about MRF? Numbers came out today.
Yes, not so comfortable. At the end of the day, against the estimations, they are weaker than market estimations.
Understood. Slightly lower than market estimates. In fact, the stock also down roughly 4% as we speak. Aditya, let me take it to you. Just with regard to what's your sense with regard to some of these tire stocks? Prashant seems to like something like an Apollo. MRF numbers came out, stock down 4.5%. Any kind of views on levels with regard to some of these counters?
I think on overall tire space, I would like to wait a little bit before, we could see some stability in prices. Among all the stocks, I still like Apollo Tires. I think that is an outperformer, and outperformance could continue for some time. But overall, as the sector, I remain neutral as of now.
Sure. Okay, let me switch focus. Tushardeep Singh, my colleague, caught up with Rakesh Sharma, the executive director at Bajaj Auto, on the launch of the biggest Pulsar yet, the NS400Z. It's a 400cc bike. And listen into a slice of that conversation.
Foremost, ever since NS series was launched in Pulsar, and met with a lot of success, particularly amongst people who wanted high performance motorcycling. There has been a big requirement from the fans of when are you getting a bigger Pulsar? Actually, even though we did not release the information about it being a 400, the market and the customers had already guessed it, that there is going to be an NS400Z. So that was the foremost thing. Second is that we felt that there is a need and there is an open space right now over here for high performance street biking, to bring high performance to everyday use. If you see, the Dominar 400 is more of a sports tourer. It is for longer rides. It's got a longer wheelbase. It's heavier. It's got. It has been positioned for people who would be using it in the city, but really would be wanting to take trips, weekend trips, longer trips. The KTM brand is more edge of the seat, very high level of thrill. Takes expertise to manage a Duke 390 or a RC 390 kind of a thing. With the Pulsar NS 400Z, and its price of 1,85,000, we bring high performance, everyday biking, street biking within the grasp of a wider audience.
Well, Bajaj Auto in focus on the back of that new launch. But we're very, very close to market close this week. And therefore, I'd like to thank Prashant as well as Aditya for their views and for spending the better part of the show with us and giving all of those views to our viewers. But let's switch focus back on to India market close. You're down around 0.75% on the Nifty 50 from roughly 200 odd points, which is where we were in terms of the negative at the lowest point. We're somewhere we've improved a wee bit from that point. So definitely a positive there. You're also seeing the Nifty Bank see a bit of recovery. But let's pull up the heat map. See where some of those rates are settling at, especially something like a Reliance, definitely in focus today after the kind of pressure we've seen on the stock. It was down almost 3% when we started this show. It's down roughly 2.2 in trade today. So clearly the pressure sustaining. Larsen & Toubro also down nearly 3% in trade. Among the gainers, I'll switch focus. Coal India on the back of numbers as well as dividend, of course. 4.7% higher. You're seeing outside of that far and few in terms of the gainers. SBI, ICICI Bank pretty much flat. Shriram Finance, which has had a good week, also largely flat. But Bajaj Finance, which started off on a very, very strong note, all of those gains leveled off. You're down, or rather you're up just about 0.7% as we close. Bajaj Finserv also just 0.5% higher. Mind you, this started 6+% higher, that counter in trade. Outside of that, you're seeing pressure across the board. Whether you talk of an IndusInd, HDFC Bank, JSW Steel, all of which are seeing plenty of pressure, down 1 to 2%, all of those. Let's pull up the sectoral charts, see what could possibly be trading in the green. Except for the PSU basket, absolutely nothing. IT continues to lead the losses. Probably the top sectoral loser on the Nifty, at least this week. You're seeing infra as well, down around 1.25%. Realty also seeing some pressure, 1% down. Let's pull up IT actually and go within that in terms of constituents. We've closed for the day as well as for the week. Pretty much all constituents in the red except Infi, which is just about by the skin of its teeth closed in the green. Coforge, of course, leading that pack of losers, but Tech Mahindra also seeing pressure outside of that, so 1.5% lower. But you're seeing pressure across the board when it comes to IT. Let's also pull up the Nifty Bank and its constituents, because Kotak Bank was in focus through the week. What we've continued to see is pressure on that one, 1.6% lower on that stock. Outside of that, Bandhan also having its set of issues with regard to leadership, 1.6% lower as well on Bandhan. HDFC also down 1% or so. What really got spared was ICICI and AU absolutely flat, and SBI just about 0.1% higher. Let's pull up the BSE 500 before we go to the advances declines as well as the mid cap, small cap end of the market. Some few names, of course, largely earnings dominated. That's been the situation, at least within this pack. If you see the top gainer as well as the top loser, rather the top loser as well as probably the 2 out of the top 3 to 4 gainers are all earnings candidates. MRF also on the back of earnings, HFCL also on the back of earnings, Raymond too. Let's pull up the mid cap as well as the small cap indices, see where they've settled in at close, where we've closed in at when it comes to them. Mid cap 0.4% lower, largely in line with a slight bit of outperformance versus the benchmark on both those counts. Quickly on the advanced decline before we close out for the day. There you go. We've not closed at the worst point of the day clearly, but the breadth of the market clearly extremely weak. 2:1 in favor of the declines. That's all from all of us here at NDTV Profit for this week. We'll see you on Monday morning, of course, but do stay tuned. More on the other side of this commercial break. Yeah, I'm ready. Well, negative day for markets to close the week off. We saw the Nifty down around 0.75%. Very similar number on the Nifty Bank as well. Pressure on both the Nifty as well as the Nifty Bank to close this week out. Nifty Bank, in fact, has had a bit of a whipsaw this week. Very close to all-time highs and then coming straight off. Now let's also, or rather very close to 50,000 before it came straight off. Let's quickly move across with regard to the heat map, see what's moved in the Nifty 50, because you saw pressure across the board, but there were certain pockets where the pressure was particularly strong. Look at the likes of an RIL down 2% odd, a Larsen & Toubro, a Maruti, anything between 2 to 3% lower on those three large counters, right? And you look at some of the other names which have done well. It's earnings heavy and it's specific. Something like a Coal India has done very, very well, 4.8% higher. A Grasim something like an SBI was largely flat on a tough day of trade. Shriram, ICICI within the banking pack, Infosys within the IT pack. But outside of that, you look at the IT pack, pretty much all constituents in the red. And you also look at the banking pack. Outside these three, you look at an HDFC, Kotak, IndusInd, all of which faced tremendous amounts of pressure. Pharma, well, you look at Sun Pharma, you look at something like Divis, all of which were largely in the red. A Cipla was in the green. Let's quickly move on to the broader markets. First to the advanced decline, if we can. The advanced decline, we've closed roughly at possibly the lowest point, but there's a bit of a recovery in terms of the advanced decline ratio at the fag end. So that's probably a positive, but not really. 2:1 in favor of the declines. The breadth of the market extremely shallow from that midpoint onwards. Let's go across to the mid cap and small cap end of the market, and we've seen the mid cap and the small cap indices outperform by just about a wee bit. That's what we've seen today. The BSE 500 top gainers, top losers list largely dominated by earnings. You look at something like a Coforge, an MRF, an HFCL, a Raymond, all of which were lower on the back of numbers. Let's also pull up the sectoral indices and specifically focus in on two. One is the PSU pack, which has done very, very well. And the other one is the IT pack, down around 0.9%. Outside of that, realty and infra were the top drags. But within IT, if we can pull up the constituents, what we'll see is pretty much all constituents in the red outside of Infy. So the pressure on IT was solid, especially given the Coforge numbers. Bajaj Finance, to just finish this one off, started 6% higher, but closed largely flat. In trade, around 0.2% higher. Not bad on a day like this, but quite muted given the kind of start it had for the day. So that one was in focus as well as RBI lifted its embargo. Thank you.